Welcome to Financial Repression Authority's Roundtable Insight, where the best fund managers, economists, and industry leaders discuss the key investment issues and challenges in the current macroeconomic environment.
Hi, welcome to FRA's Roundtable Insight. This is Richard Bernoulli. Today we have Demelza Hayes and Bill Laggner. Demelza is founder of the Crypto Research Report. She is also investment manager of Cayman-based Dash Investment Foundation. She is also Forbes 30 Under 30 and a teacher at the University of Liechtenstein. And Bill, we've had on the program many times. He co-founded the Bearing Asset Fund. His current interests include a focus on blockchain and cryptocurrency technologies and development. Welcome, Demelza and Bill.
Thank you for having us.
Thank you.
Great. I thought today we'd do a focus on blockchain, cryptocurrency, and where you see that going. So let's start with Demelza. What trends do you see in the blockchain and cryptocurrency industry?
Well, that's a great question. I think, originally ICOs were a big trend. That's kind of passed on now, and it kind of moved into security token offerings. Sorry, when I say ICO, I mean initial coin offerings. That kind of moved into the security token offering space. But we see a lot of problems there, and that's not gaining as much adoption as people thought it would. One reason is because security token offerings are not bearer share instruments. So, with gold and with cash and with Bitcoin, it's kind of like a bearer financial vehicle where when I pass the private key to you, or when I pass the gold bar to you, you're now the owner, the controller of that asset. With security tokens, because they are registered securities, and they, the people that issue them have to do what's called whitelisting, where they whitelist specific addresses that can trade those coins. It no longer is really a bearer share, because it still has to, in order for that transfer of ownership of the security to be valid, it has to be, registered, or what's the right word? It needs to be tracked and even cleared potentially is where we're going with this. So I would say security token offerings is kind of on the back burner. And what we really see is stable coins and central bank digital currencies. This is the big topic that the regulators are discussing, and this is the big topic that academics are researching.
And Bill, your thoughts?
Yeah, I think that's most of the ideas that I had around cryptography. I think with what we're experiencing in the world right now, it's probably a good idea just to take a step back and just ask ourselves, how and why we got to where we are. So, all of this is essentially an outcrop of just, trust in a trustless world. We're, every day now we're seeing distrust in governments around the world. The unintended consequences of government bailouts. And so, Bitcoin was the first decentralized private money experiment, and it's become more than an experiment, obviously, the last decade. And we had the introduction of Ethereum and smart contracts. And I do think that things got very carried away in 17 and 18, where you had, essentially an echo bubble form that's burst. And a lot of those participants have been blown out of the market, which is healthy. And now we're seeing better technology, better teams, better human capital, around various projects. I do think the regulators, I just on a call yesterday, I do think the regulators in parts of the U.S., Wyoming and Texas are starting to get their hands around this and trying to create a pathway where more capital formation can exist with the and augment the existing system. But yes, stable coins, interesting. Governments now, China, et cetera, talking about issuing a digital fiat currency. Again, those will probably be monitored, controlled, censored, et cetera, probably taxed at some point. Maybe not initially, but ultimately will get taxed. So, we're going to have these two worlds. We'll have the world of centralization, and it will just coexist with decentralization. And, I do think, though, that the decentralized world this year and next year will mature significantly.
And yeah, speaking of regulators, how are government regulations evolving in this space? Demelza?
Well, in the US, you have the SEC, the Securities Exchange Commission, and Hester Pierce, who is kind of been a champion of blockchain. She released a safe harbor proposal, which hasn't been adopted and is not garnering that much attention, actually. But basically, the safe harbor idea was kind of to allow entrepreneurs to operate within a 3-year period where they were safe from being in violation of securities laws. Because you have this type of problem, what Hester Pierce refers to as a catch-22, where basically, in order to create a coin, you need money. You have costs for development, you have costs for your own bills, you have costs for equipment. And if you want to create an innovative technology, basically, she says that if you go out and raise funds in order to launch a token, well, that can be considered an unregistered security, according to the Howey test. So what she's arguing is that entrepreneurs can't go out and raise funds in order to create a token or a coin, and therefore, we're stymieing innovation. So her idea is basically to allow people to raise capital, create the coin, and then if it's not fully decentralized, if there's not a network of decentralized users continuing the development and continuing the validation of that project, then at that point it would be liable to be found in violation of securities laws. But prior to that point, giving it 3 years to grow is kind of where she's going with that. So I think on the SEC side, they do have a mandate. If you look at the 33 Act, they do have a mandate to, let's say, protect consumers. On the other hand, the CFTC, the Commodities Futures Trading Commission, who my doctoral supervisor is the former chief economist there, they don't have a mandate to protect consumers, so to speak. They have a mandate for transparency. So effectively, you have different organizations with different, federal regulators having different claims on what cryptocurrencies are and why they specifically have jurisdiction. The CFTC has said that Bitcoin is a commodity. The IRS has said that Bitcoin is a property. Several organizations have said that Bitcoin is money. And yeah, basically then you have, in addition to that, you have the blue sky laws in each state that also impact your ability to raise capital by issuing a token. So, there's a huge array of regulations, patchwork, patchwork collection of different regulations, different regulatory groups. So for me, in my opinion, I think that there still needs to be a lot more clarity. Commissioner Hinman said that Bitcoin is sufficiently decentralized to not be considered a security. They did say that they would release guidance specifically on cryptocurrencies. They did release some guidance, but it was still quite vague. On the other hand, the former chairman of the CFTC, Gary Gensler, he did say that he believes that many cryptocurrencies are in violation of securities laws. So you have really a wide array of opinions expressed.
And I would just add to that. I agree with all of that. You have, especially in the United States, right? You have these various regulatory bodies, and they are in numerous ways trying to protect their own turf. And I think it's pretty obvious now that you could see, up front what regulatory capture looks like. But I think ultimately, and especially in a world, post-COVID, we're now witnessing basically a depression economically, and so the teeth of regulation and the bureaucracy of regulation, I think, ultimately is going to have to fall away. And it won't fall away initially; it'll fall away in stages. And what you're seeing now, I mean, I'm seeing it here in the U.S., is you've got several states that are willing to, state securities regulators, battling the SEC, trying to get more clarity on security token issuance and just the general treatment of cryptography. Because, you go to a place like, I was just in New Zealand a little over a year ago, and, where cryptography is taking off, and there's a venture studio that I'm close to there. And, there are no capital gains taxes on tokens. And so the token world, which was, again, an experiment 3 to 4 years ago, and has become actually part of the daily fabric, because you've got certain decentralized applications playing out, and tokenization of those applications in exchange of value. My guess is it's analogous to the e-commerce world. Initially, you'd go to an electronics retailer and find what you wanted, and then people would just go to Amazon to buy it to avoid the state sales taxes. And the same thing, I think, ultimately will happen here. More and more people will go from experimenting with this, actually using it, and they'll deal with the repercussions. Is it a security token or not later? Just because it's down to just, I think, survival, capital formation, and the entrepreneurial spirit. I mean, look at things like Uber and Lyft. Look at how many violations they, quote unquote violations, they were infringing on within certain countries and certain cities. So the same thing's happening here, and there will be certain states and certain countries that embrace this decentralized peer-to-peer movement, and there will be others that continue to, over-regulate. And then what ultimately happens is the human capital will flee and go to where it's most respected. But it's a very fluid situation. But I expect, for example, I'll make a couple predictions. I actually think you will not have capital gains taxes on any of this in 12 months, just because the economy will be so weak that the political class will try and let this evolve.
Now, sorry, go ahead.
If I could make a quick addition to what Bill just said, it's a great point. If you look at EOS, they were found in violation of securities laws, and they raised $4 billion in 2018 during their initial coin offering, and they paid a $24 million fine to the SEC. And basically, people say that fine was so small that they basically kind of made the precedent that you can do ICOs in America if you're willing to pay a certain fine. Now, Telegram, which is this online communication, messaging app, they also did an ICO and were found to be in violation of SEC law. And actually, the SEC completely shut down their distribution. This was last month. They announced that Telegram is not allowed to distribute a single token, that they must return client, investors' funds. So you have it seems like, depending on who your legal team is and how good they are, it seems like there's it's a gray area.
Interesting. And to what extent do you see in the long term governments allowing private-based cryptocurrencies, either in the form of currencies or securities, coexisting with government-based cryptocurrencies? Demelza?
You want me to start? Or
sure.
Do you want...
Go ahead, Bill.
Yeah. I just think, you have to... We have to just think about where we are, right? So today, globally, people are are in the streets protesting. And really what they're protesting is the loss of freedom and essentially the growth of crony capitalism and the state. And so I think you're going to see a lot of this just exist and grow despite what these various governments are contemplating. I mean, look, we have a history of governments around the world trying to stifle Bitcoin, and each time they try it, the Bitcoin price goes up and you get more adoption in those respective countries. I can give you a list. But the point is, people are trying to survive. They're losing trust in fiat. And we're watching central bank balance sheets expand at an unprecedented rate, right? I mean, look at the growth of central bank balance sheets the last 90 days. So, I think what you're going to see happen is several things happening at one time. One, you've got, $19 trillion of zero or close to zero and or negative interest rate sovereign debt. At some point, the holders of the sovereign debt, I'm talking about holders away from central banks, will leave sovereign debt and allocate that capital elsewhere. It could be gold, it could be Bitcoin, it could be a basket of real assets. I mean, just take your pick. But my point is that the confidence in the system is decreasing at an exponential rate now, and so people, whether they're individuals or institutional investors, they're going to have to do what they have to do to protect themselves. And I mean, there's countless examples. For example, in Argentina, where these programmers have been paid in dollars, and then the country wants to impose a 30% capital control tax on anyone receiving dollars. And so what are these people doing? Well, they're just taking Bitcoin. Now, are they quote unquote violating laws in Argentina? Maybe, but these people have to survive. And they've had 3 currency debacles there in the last 20 years. So people are going to do what they have to do to survive, keep their standard of living the same and or improve it. And I just think the state regulators are going to have less and less of an impact. Now, all of that said, it's also incumbent on the industry, right, the cryptography industry, to I think self-police and even raise the standards, because I think 90% of what's happened in the space, in my opinion, the last 5 years is just nonsense. It just goes straight to zero. It has no real economic viability. And I think, just like the .com world and the internet, and 10% of it will survive and then become part of the tapestry. But I think it's incumbent on all actors in the space to elevate their game, because essentially you're competing with state money and state securities. So build something better. Build something that actually solves real world use cases. People will find it. They will adopt it, and you'll actually get this denationalization of money thesis, unfolding in a big way, as opposed to today, where you only have, maybe 60 million people around the world that have experimented with cryptography.
And your thoughts, Demelza?
I agree completely. I think the one component, I'm in a bubble of tech people in Zug and in Liechtenstein, Crypto Valley and Crypto Country, what they call it here, that, we're 1 hour apart, and basically everyone here is somehow, we're in a bubble where we think it's obvious that people should, we should go back to Hayek's thesis of the denationalization of money, separate out money from the state, and have privately competing money, because competition is what brings about quality in money. And either inflationary or deflationary currency is if it's manipulated by a centralized group, a top-down group. You don't have spontaneous order, and you have a noisy signal for what consumers want in the market, because prices are no longer surrogates of information about consumer demand. So the producers are always going to make a misallocation of capital as long as the money is not serving the purpose that it ought to, which is to basically be the exchange rate between various goods and services in the economy, and to be a measuring stick by which producers can gauge demand. So I do think that we need to have more competition in money, either privately issued currencies or decentralized issued currencies, and they can compete with the government currencies. On the other hand, I think that there's a type of I'm not sure logical or emotional or what it is, but a lot of people don't want to take responsibility for their own wealth and their own lives, and they want to believe that the state is the one that's going to provide for them. And so a lot of people, contrary to tons of evidence, they don't want to use other currencies except for the ones that are provided by the state. And unfortunately, these people that are holding on to those currencies are going to be the worst victims of the loss of purchasing power, and the increase in wealth inequality due to the Cantillon effect. So I really think that it's going to take a while for people to adopt this technology, or to even move into gold even again, as money, or as a store of value for the long term. But I do think that governments will not have an option. Some governments may, in response to COVID-19, say, "Oh, guys, look, we're in a big economic collapse. It has nothing to do with the unconventional monetary policy that we followed for the past decade. Has nothing to do with, us destroying the currency. It only has to do with this horrible illness that took the world by storm." And at that point, they might try to say, well, we need to release a central bank digital currency and do a debt jubilee or whatever. I have no idea what they're going to try. They always have a new trick up their sleeves. But at that point, I think a lot of people will on board with the emperor's new clothes, and then that currency will slowly be debased over time. So unless there's competition, and the more entrepreneurial countries like Switzerland will allow this, and the countries that don't allow this are going to get sent back into the dark ages if they don't allow innovation in this space. So it's really a choice for regulators. But I know personally regulators that work in Switzerland, that work in Liechtenstein, and that work at the Swiss National Bank that own cryptocurrencies personally. So I think that you're going to have some countries that allow it, and as long as there's not a global policy to shut down cryptocurrencies, I don't think that any one country can stop this movement.
Mm-hmm. Interesting. And you mentioned the central bank digital currencies. To what extent is technology being factored into those, into that development in terms of being able to manipulate the purchasing power of currency, if you will? Given the advantages, say, of Bitcoin, of limited numbers of that currency's fixed numbers, how could the central banks architect and innovate into cryptocurrencies to continue to allow government printing of money, if you will? I'm going to start with Bill on this one.
Yeah, so I think what will unfold there is, and it will start with China. They will roll out their digital renminbi. Now, of course, I don't want to get too far into the limitations of the existing renminbi, and all the money printing that's gone on within China the last decade. But, China is the poster boy for the surveillance state. And they're going to use the digital renminbi as a way to just magnify that theme significantly. And they will track the usage of the money. They will figure out ways to implement new taxes on that digital renminbi, et cetera. Now, does the rest of the world follow? That's going to be, I think, the real issue. You look at the United States, where you have a percentage of the population that receives government payments. The government could say, look, we're going to make these digital dollars programmable. You can't spend it on alcohol or tobacco, or they could have a litany of things to deter you from using that program of money. Or they may just control where you spend it and or when it expires. Now, here's the value, but it expires in this time frame, and then that value has the inability to leave that specific censored domain. I think that'll probably happen in the United States. I know it's terrifying to think about that, but I think that probably is inevitable. So then what will happen is you'll have two worlds, right? You'll have this world where the state and its control over a percentage of its population will succumb to that dystopian nightmare. And then there's going to be another percentage of the state that basically operates outside that domain and uses Bitcoin or tokenized gold or shares of a company, private or public, or tokenized farmland, or whatever the piece of value is. And then the question is, the group that is outside the programmable digital currency world, how are they taxed? And because at the end of the day, right, government, they fear deflation, and they ultimately will get their inflation. But at the end of the day, they want commerce, because commerce is the lifeblood of the state. They like to regulate and tax commerce. So they want commerce. And I think they will allow cryptography to coexist, because I think it will act as a stimulant for commerce, which they will ultimately regulate and or tax. Now, how they go about regulating and taxing it, we've discussed a bit of it, but I think that's going to be another intellectual battle that we see unfold in the near future.
I agree. Basically, with a coin that only has one validator, the central bank, and there's no need for that database to be validated by other network participants that have conflicting interests with the central bank, then effectively we would all be holding wallets like bank accounts. And at any point, the Fed or any of its branches could really do helicopter money and double the money supply in our wallets, and double the money supply in circulation. And there's nothing that we could do to stop that. There's nothing that we could do from instant, halving or more of our purchasing power. And when you have multiple conflicting parties validating the same database, that's when you have more trust in it, because you have these conflicting interests, you have strangers, and they all have to agree on certain rules on what determines which database is the correct version at this moment, and what changes can be made to the supply and to the amounts in people's accounts. There have been coins that have been programmed where there's like demurrage, where they're basically, like Bill said, there's an expiration date, or over time, the value decreases. So every single time that you do a transaction, more coins are spent, so that they're burned and you lose that value, so that you're incentivized to spend it quickly. The coins that were released to the market with these types of economic models completely flopped, had no traction. And I think that shows how bad the current monetary policy is, that when you replicate it in the cryptocurrency world, you can't find a single investor.
Interesting. Bill, you do a lot of work on technology development in this space, cryptocurrencies, blockchain. Can you give us some ideas of what those technology challenges are? You've talked in the past about open source ability and interoperability between cryptocurrencies, potential backing in terms of a commodity, and use cases you mentioned earlier.
Yeah, good question. Well, there's some brilliant people in the space. I have to say, in the last 5 years, I've met some amazing people, and the technology continues to improve. The challenge, I think, and this reminds me a lot of the internet back in the mid 90s to late 90s and even through the 2000s. The challenge with all of this is, A, what problem or problems are you solving? And B, how do you get product market fit and adoption? And that's going to vary based on, culture, demographics, et cetera. And so when you look at the initial wallets that came out, say 5+ years ago, very clunky, poor, pretty poor user interfaces and relatively poor experiences. And the biggest challenge was just connecting, going back and forth between fiat currencies and, let's just say, Bitcoin and or Ethereum. Now that's improved dramatically, and there's numerous wallet companies, and then those particular wallet companies are they're able now to interact with different types of tokens beyond Ethereum and Bitcoin. And you even have, for example, brands that are trying to tokenize value, whether it's Nike or I was just reading about Coca-Cola the other day. These groups are trying to tokenize value within their product sets, and then having those specific tokens, almost like a digital voucher, move in and out of wallets. And then what's ultimately playing out now is think about all of these brands and or retailers and the amount of money that they typically spent trying to settle a transaction, clear it with the consumer, and then the ongoing advertising and marketing costs to stay engaged with that consumer. So all of those inefficiencies essentially over time get taken out of the system, and you have this direct, two-way value movement with consumers, and the underlying technology there, as I said, has improved. Very similar to email and browsers and browser wars, search engine wars, et cetera. And I do think, though, that we're going to go from 60 million users globally to, let's say, 500 million users globally. I know Facebook's working on Libra. People have some apprehension there because of the historical surveillance of Facebook, and I can understand their apprehension there. But I do think Libra will essentially unleash this massive adoption, and what will ultimately happen is people will get closer to specific brands or ecosystems or networks, and then when you lay that on top of the idea of storing value and earning interest on tokens. I know we were talking earlier about stable coins. So the stable coin technology where, let's just say you have a tokenized dollar, and the idea where that dollar can be sent to somebody else without the typical, cross-border fees or, credit card fees, et cetera. That creates, it's trillions of dollars of friction per year, right? That can get literally taken out of the system. And then that stable coin, the technology is there now where you can earn interest on certain types of stable coins. Now, they have different levels of risk, and they need to be, and it have been fully disclosed to the participants. But the idea of storing a stable form of value away from the traditional banking system and the technology that's improved around that the last year or so. There's a number of these stable coins. I think it's like $10 billion now in stable coins. So all of that is technological improvements that we witnessed mainly the last 5-6 years. But I do see, the infrastructure improving so that different types of tokens and blockchains can interact with one another. It's almost like Cisco, unleashing the internet with the fat pipe thesis, and different forms of data moving through it, et cetera. It's the same situation here. And then I think, the friction that we've currently witnessed in the last, 7-8 years, that friction over the next 2 years should decline measurably. So, and that, in my opinion, will become one of the catalysts to go from, again, 60 million users to maybe 400, 500, 600 million users. This whole thesis of money over IP, value over IP. So a lot of people with a seat at the table, and my guess is it'll be a fair, instead of 1 or 2 companies grabbing the lion's share of this, my guess is it'll be many companies, benefiting initially, and for at least the next several years. But so liquidity improves, price discovery, different types of user interfaces and wallets, and then how secure are these networks? How do you hold private keys? All of that has been improving greatly. And look, it's a fascinating time. So I would say that probably the next 2 years, you get this kind of exponential global adoption wave.
And your thoughts, Demelza, on that?
Oh, I completely agree with what Bill said on this topic.
Great. Do you cover some of the technology challenges in your crypto research report?
Well, actually, I didn't want to mention it when you introduced me, but I've actually just joined Cointelegraph as their director of research. It's a great big position for me because Cointelegraph gets 10 million views a month. They are the largest cryptocurrency media outlet in the world, and they are moving into the research space. So basically you've had this, you've had kind of like entertainment news in cryptocurrency space. It's been very targeted towards retail investors for the past couple of years. But now you've seen this huge movement into kind of heavy hitting in-depth articles by research houses like Binance. They have a great research team. CoinDesk, they have great research reports, and Cointelegraph wants to move into that space as well. And so we're building up a team. Actually, there's already 7 people there, and I'm just joining this week actually. And we do work a little bit on I've done work on interoperability in the past. It's a little bit tricky because of different problems with how you lock up coins and how you represent a coin on another token on another blockchain. For example, I think one of the big trends has been like second layer chains that allow for faster payments and for lower transaction fees. So I actually sent a Bitcoin transaction yesterday to a family member for a birthday, and I think I sent them $50 and the fee was $5. So the Bitcoin fee has gone up to $5 now. It's pretty high, which does point in the direction that Bill mentioned. Their adoption is growing. The network is getting more and more transactions on it, and so the fees are high again on Bitcoin. And people have thought, how can we reduce these fees? How can we make this a better, how can we make this better for cross-country payments, micropayments, et cetera? And they did, the Lightning Network. That was a big approach. For different economic reasons, I personally was not convinced by the Lightning Network. However, if you look at wrapped Bitcoin on the Ethereum blockchain, that's actually growing quite quickly. So basically, people will lock up Bitcoin in a type of escrow account and then issue ERC20 tokens that are traded, in the Ethereum blockchain, and they basically track the price of Bitcoin. So, you have different approaches to this interoperability basically through this concept of atomic swaps, but so far, I don't think we're there yet. Maybe Bill's been following up on this more because there's a lot of technological advance in this space. I think we still have a while to go. However, once, if we do find a solution, it is very interesting because right now we have each chain investing in its own security, either with hardware and miners on the Bitcoin network, or with locking up lots of capital and staking it on, for example, Dash, on the Dash network. So you have different security models, and if you can work on interoperability, then I think there's a whole realm of different potential innovations that can sprout from that ability to kind of utilize other chain security. So I think it's an interesting space, certainly.
Wow, that is interesting. And the final question for today is overall your vision on cryptocurrencies and assets, how that can become part of asset allocation, wealth management, and even the cash holding part of a brokerage trading account, if you will, in terms of holding cash, in between trading and investing. Bill, your vision?
Yeah, I think the most amazing piece of the puzzle here is that the rest of the world that doesn't live in places like Switzerland or Liechtenstein or the United States, even parts of developed Europe, they've never really had access to traditional financial services, and so they've always, unfortunately, been, victims of this fiat charade. So the idea that you could take someone in a place in Latin America and give them access to, traditional financial services from a phone, and the fact that the costs of doing this, and let's face it, I know we were just talking about the cost of the Bitcoin network. At times it could get costly, but ultimately the cost of doing all of these things will plummet as technology improves. This technology has improved the standard of living of people globally in every facet of their life except for money value. And it's one of the reasons why we have been watching the same movie over and over again ever since the introduction of central banks, and the lunacy that we've witnessed the last 100 plus years. So the idea that people can access alternative forms of value, they can participate in certain types of communities and ecosystems, they can build value, and then they can send value as easy as sending an email or a text message. To me, that's going to usher in, a world that we probably can't even think about today, because we're so used to living in this very repressive and controlled set of systems. And I think that the key to all of this, and this is the unfortunate part, is that most people have never heard of Hayek or von Mises or Henry Hazlitt and others. They don't really understand basic economics because of the education systems around the world. So thankfully, there's a number of people in the cryptography space that understand Austrian economics, and there are various ways online where people are learning, and they are, going beyond just putting their toe in the water. And so education, and it's good news, by the way, Demelza, with your hire at Cointelegraph. So groups that are actually educating the population as to what these alternatives are, what they actually embody, and then the technology is increasing, user interfaces are getting better. And so people will go to these, blockchain-based wallets or apps, and they will do their own research. They will learn from others who have been down this rabbit hole now for 10 years. And you will see this whole new way of people saving and investing and forming new endeavors. And the transparency, this is the other thing that I think we haven't talked about, which I think as an investor in public companies for many years, the governance today, whether it's the political scene, public companies, private companies, the governance today is pretty abysmal. And so what's going to happen is you're going to see governance and transparency improve exponentially. And so as transparency continues to improve and as stakeholders feel like they actually have a seat at the table, you are going to see, again, more of this permanent capital formation evolve. And instead of, having people just speculate all day, which we've seen a lot of, not just in the cryptography world, but in the general, financial markets, you're going to actually see more permanent capital unfold. And then those various pools of permanent capital and ecosystems will create higher levels of trust and then significantly higher levels of participation. And I think so governance and participation is what will happen. And people will look beyond these cryptographies as just stores of value. They will look at them as actually these entirely new sets of ecosystems, and something that you couldn't come up with a better playing field for that. I mean, now that the world is in utter disarray and we're getting to see, the failure of centralization, centralized policy, central banking. I mean, the table's there; it's right there in front of us. And so, the next 2 to 5 years will be fascinating. So I'm very encouraged, and I think the technological improvements will be significant. So very exciting times.
I agree, Bill. I can only echo that. I'm also very excited. I've been excited for years, and the longer that this goes on, the more people that I see come to this space, and the more people that I see unlock freedom for themselves. Like you mentioned, it is kind of like a parallel society that's developing, and I wish it didn't have to be that way, but it is better that some of us have freedom instead of none of us. And I do think that more and more people will take it into their own responsibility to be in charge of their finances and to gain exposure to this technology either through publicly listed stocks or through funds or through holding the assets directly. I was in a podcast last week and I heard somebody explain it in a really nice way. He actually said that we're automating trust and we're automating transparency. So those points that Bill made about transparency, this technology really allows, a lot of people to share data and share information and have it on a ledger that can't be adulterated without everyone else knowing. And so you have a lot more trust, you have a lot more transparency, and that market globally. His name was Lasse Clausen. He's the founder of a Berlin-based blockchain VC fund. He basically said that the market for trust globally is about 35% of GDP. So he argued we're spending 35% of global GDP on, reporting, accounting, auditing, regulations to help certify people, whatever, lawsuits, everything. And that's about 28 trillion a year. So if we can automate different parts of how we trust people now and reduce some of that inefficiency or dependency on maybe organizations or people that shouldn't be trusted. I think that this is going to bring a lot of economic prosperity for the whole world. Now, regarding specific questions about cryptocurrencies within asset management, I will just pitch my newsletter. I have a weekly newsletter where I actually show people the coins that I hold and what trades I make on a weekly basis. And I think that gold-backed stablecoins are quite interesting, and stablecoins backed by farm products and anything else. But stablecoins backed by fiat, I'm not actually that keen on, because there is a downside risk. The risk that, for example, Tether is not backed by the dollars that they claim that actually they've admitted, right, that they only 74% backed by dollars. So they're basically printing dollars that are unbacked. And at some point we could all wake up and the market could decide that that peg is no longer 1-to-1. And we've lost 30% on that investment. On the other hand, the upside is zero, because if you price it in dollars, the upside of a dollar pegged stablecoin is zero, because it's supposed to be stable. So you have like a high downside risk and basically no upside potential. So I'm not exactly excited about dollar-backed stablecoins or central bank digital currencies per se. Right now, I haven't seen any of the ones that I'm interested in so far. But I am generally interested in the movement of being able to invest in decentralized or even partially decentralized monies, and also in financial products that allow me to gain exposure to that movement. So I'm very excited. I think that over time, as the economy unfortunately gets worse in various countries, including America, more and more people will move into this space. And I think we see the banks, already trying to prepare for that movement by setting up the right infrastructure to be custodian of these types of assets and be regulatory compliant. So I'm actually very excited. I think there is a space, at least for diversification arguments, if nothing else. But generally, I'm very personally, I'm optimistic for the future of this industry.
Wow, super interesting and exciting, with lots of potential for bettering our society, the economy, and the financial system. How can our listeners learn more about your work, Bill?
I haven't actually published anything. I used to publish blog years ago, but they can find me on Twitter, Bill_Laggner at Twitter, and that's where I've been publishing small amounts of data on the space.
Great. And Demelza?
People can find me on Twitter at CryptoPhD. That's my handle on Twitter, CryptoPhD. And generally, I'm happy for anyone to reach out with any ideas. I will be officially joining Cointelegraph this week, and I'm still going to keep up the Crypto Research Report, which is a quarterly report. So yeah, I'm happy to hear everyone's thoughts and continue this discussion.
Great. Thank you so much.
The FRA Roundtable Insight Show is for informational and educational purposes only, and should not be considered as a solicitation or offer to purchase or sell any securities. The investments, investment strategies, and investment philosophies discussed or presented on the show each involve their own unique risk factors, which are not discussed on the show. Any discussions among the panel participants or responses to listener inquiries are based on the personal opinions of the panel participants and do not take into consideration the listener's suitability, objectives, or risk tolerance. Please be advised that you invest or speculate at your own risk.